Thanks for tuning into Talking Point. I'm your host, Niraj Shah. Well, the conversation today with my guest is as much about his company, which is Prestige Estates, but it's also about the different facets that Prestige Estates caters to. And therefore, we've got a one stop shop of sorts today, wherein we talk about the business of real estate and a few things that are happening there or not happening there. And also hospitality, uh, malls, hotels included, and then try and talk a bit about the changing face and the challenges that India Inc. may be grappling with as COVID-19 extends and runs amok in the country. Mr. Irfan Razack of Prestige Estates Johnson right now to talk about all that and more. Mr. Razack, good having you. Thanks so much for joining in. Hope all is safe under the circumstances.
Yes, as safe as can be, Niraj. We have to practice this as a second nature now. And if you do that, I think we can protect not only ourselves, but people around us and people who are working with us. We have to bring in that awareness. And the awareness is the important thing. And we can't throw caution to the wind. We have to be alert all the time. And at the same time, we can't just be scared and just locking ourselves up and sitting down doing nothing. We have to go out there, do what we have to do, but in a manner which will not only protect the others, which also will protect us. So it's a balance, and I think we are getting to learn that. I think we're getting to there to see that we're able to manage that properly. And most importantly is this awareness. And once the awareness comes, everybody starts doing things what they're supposed to do. And that is the best thing that can happen now.
Yeah, well, inshallah, as they say, Mr. Razak. Let's
Yes.
let's try and talk about some of the facets. Though I know it's difficult to talk purely about business in such times, but I'm compelled to first talk about that a bit, and then we'll talk about the other aspects too. Um, how do you see business shaping up in the near term? As much as we were all hopeful that we might see a bit of a flattening out, and therefore the revival in the economy from the April May June quarter will help all businesses. Somehow, the virus is not showing any signs of slowing down in our country, at least.
Yeah, we are a large country. We've got a huge population and we've got a density of population. And then again, a varied population. So it's difficult to just, sort of give one sort of paintbrush on it, saying that we are not doing well. I believe comparatively, looking at the numbers that we have done well. There is awareness. Healthcare has improved. The health officials have really learned how to not to allow people to panic, and I think in that context we are doing well. And then the good part is, the business that we are in, real estate. Uh, it's we are coming back to near normalcy in terms of getting back labor, seeing that work is going on, making sure that they are safe, making sure that they are protected, they practice the hygiene and the safe distancing that they are supposed to do, and bringing them awareness. It's very sad, for them to do heavy labor with masks on in hot sun. It's not easy, but then it's going on. We've got about 80 to 90% labor on sites. Work is going on. So because our main focus is, listen, we've made a commitment to our clients. We have to deliver as per the timelines, deliver as during the promise that we've made, and not again create anxiety amongst our customers. So that is the challenge that we have, and that challenge, I think our teams are doing well to see that the contractors are kept motivated, the labor is kept motivated. They sort of are made aware of the safety, safe practices, and at the same time go on with work. So livelihood goes on, lives are protected, and I think all in all, the economy also gets back on the rails. Because if the economy doesn't get back on the rails, it's going to be bad for the country. And I think as real estate developers, we are providing that livelihood, and we are churning the economy, doing our bit to churn the economy, because real estate actually protects more than 200 plus ancillary industries, maybe 250. And if we stop, everything else stops. So at least one portion of the activity is going on, and I'm happy to say we haven't slowed down or pulled back on construction, and now it's come back fully to what it was earlier. Of course, the 2 months of lockdown, we had come to near zero, and then it was 30%, 40%. Now we are about 85 to 90%, which is very good.
Okay. Are the are sales showing that kind of momentum? I'm first purely talking about lump sum sales, sir. They had dipped naturally in the COVID quarter. What's happening now?
See, surprisingly, that's the biggest surprise for all of us. And I talk for our company, and I think also talk for our peers. Whenever I talk to most of them, the sales have actually picked up from June, and there is a huge momentum. People have realized that they need to invest in an asset, invest in something that is real, and rather than going in for any other investments. So earlier there was this thought process of why buy a house? We may as well rent it. But now instead of rent, people are going in and purchasing houses. And not only are they purchasing houses, they are going in for larger spaces, because they know if they're getting locked in, they need space, or they need. In fact, this type of property that is selling today is either which has got space around it, and more of open space, more of landscape, and sort of a campus feel, and those spaces are selling very well, and larger houses are selling now, and people who probably had saved that money for some other investments, and who had the wherewithal, are now and buying luxury houses also. All in all, I'm actually pleased and surprised that the entire momentum is doing extremely well. Though on the other spectrum, we are worried about job losses and things like that. But at the moment, the way we see it, if I look at the face of it, the momentum is superb. And of course, another factor that is also creating the demand is the lowest ever interest rates, borrowing rates. It's sub 7%. So that's also helping the cause. And there is that sort of feeling that we need to invest in a home now. And that's good for the entire industry.
That's interesting. Yeah, I heard you say that luxury homes are taking up. The belief at the end of June was that the low end housing will see the largest consumption. I'm not saying you are present there, but you would probably have an idea. Do you think X versus Y? Is luxury doing as well?
Yes, it is. In fact, see, we are in the mid-income segment, as well as the premium segment, as going up to the luxury segment. Now, every segment today is selling. We've got a project called Prestige Golfshire. Now, these are homes upwards of 10 crores plus. And, there was a time when the momentum was slow. And today people believe, listen, if I have got the money, I may as well go and enjoy my family over there, because there's just vast open spaces, a lot of greenery, fresh air, and free oxygen. And that oxygen is also not polluted. So people have opted for it. And then the last 3 months, we have seen momentum. People are buying. And now there's like a sort of a rush for it. And I believe that in the next few months, we'll be completely sold out, and we won't have a product like that. And I'll tell you one thing, we will be unable to produce something like that ever again. So whoever has bought are the lucky guys, and it's their destiny. Not only that, within that CBD also, the larger homes, the luxury homes, have got momentum and are selling, and people are committing themselves on buying, and that's a very good sign. But of course, the number movers are the mid-income housing, which is sub 1 crore to, and maybe say 50 lakhs to 1.5 crores. That's also doing very well. So all in all, the overall package for the quarter of September, we will really be having really good numbers.
Interesting. So not only are fresh sales doing well, so I'm presuming that is one part of the segment. And I presume you also have some launches lined up. So I heard you mention that you won't make another thing like Golfshire, but the other launches are lined up as well. You would go ahead with them as planned?
Yes, we've launched 3 projects in the last 1 month. We've launched a project in Goa called Prestige Ocean Crest. Then we've done a mid-income, it's more of the PM's Awas Yojana type of product, which is a 1-bedroom and a small 2-bedroom in South Bangalore called Prestige Primrose Hills. Even that has caught on fancy, and people are committing themselves. And just recently, last week, we launched in Whitefield Prestige Waterford. And Prestige Waterford also, there's a huge interest, and people are queuing up, looking at the product. We've got the show homes ready there, and everybody is happy to commit themselves. And these are, I would not put them in mid-income, but premium housing with a lot of open space. So people believe that they need that type of environment, and they're committing themselves. So three different products, two different cities. Very soon, this month again, we'll launch Hyderabad. And after that, maybe October, November, we've got a project lined up in Noida, and it goes on. So there's a lot happening, and we do not want to slow down. We believe that it's no sense in getting worried and scared, and we have to stay positive, at the same time COVID negative, and go on with our work. And I think things will work out.
Well, come to Mumbai, Mr. Razack, is all I can say. Just one quick follow-up though. Would you believe that this would be Prestige-specific optimism, or I heard you mention that other developers are also saying positively? Would you reckon that would be India-wide, or would it largely be, in your city where, or Hyderabad or Pune, where technology essentially is dominant?
Yeah, I mean, see, I'm talking about the cities that we are present in.
Got
And
it.
moreover, if you look at cities like, the other developers also, when I talk to them, they also confirm that their residential sales have picked up. And that, I think,
Okay.
it's more a phenomenon of Bangalore and Hyderabad. Chennai again is slow. Chennai has been slow over the last 6 to 8 months, and I think will continue to remain slow, more conservative thinking. And the other cities, now Mumbai, for instance, is something that where you've been locked down for so long, and I don't think there's any end in sight at the end of the tunnel. But then Mumbai, once it opens up, there is a lot of opportunity. We also have a residential project lined up apart from office developments, which we are now going to start very soon. I think those all these will be launched mostly in October, November. So there's a lot on the plate, and I think we'll make sure that even Mumbai does well, because it's a type of offering, as a type of product, and also the other thing is, it's the confidence somebody has that, listen, if I'm investing, if I'm buying, at least my product will be delivered on time and delivered as per specs.
Sure.
The Mumbai developers also extremely nice. They are doing good job. It's just that pricing went up too high. So if you're offering in terms of a value proposition is there, I think again the market will kick back.
Got it. Now, you also mentioned office spaces. Now, as I looked at your numbers, I think the office rentals numbers remain very, very strong, Mr. Razack. How is that piece shaping up in the current quarter? And what would happen to the quantum, the rate of rentals as well, if you will?
See, office today, whatever is occupied, touch wood, by God's grace, is doing well. There's not too much of notices that we receive from tenants for vacating the premises or for giving up spaces, and the vacancy levels still remain pretty low. But then the thing is, I believe that going forward, the space take-up demand will come only probably maybe 2-3 quarters later. There is some requirements from various companies that which is a sort of a momentum that was already there pre-COVID. The requirement is there, and now things had gone a bit slow again. Now they are picking up that momentum to in serious discussions to take up space. But the capex spends, new demand, new RFPs, all this I believe will take 2 more quarters. But then going forward, office demand is not going to go off anywhere. The demand will remain because India will be a hub for tech. India will actually grow stronger for IT and IT-enabled services, and there will be a lot more business in this sector and segment. And this theory of work from home is not going to last out forever. It's only a compulsion that's under compulsion that's happening, because any creative job, you need to have collaboration, you need to have camaraderie, you need to meet your colleagues to see that you produce. And it's just that it's a matter of time that everybody will start going back to office. Currently, though the cities, even in Bangalore, you go out on the street, it looks near normal. But two segments are not working. One is the schools, the other is the IT sector. They're all working from home even today because the MNCs believe that their staff is rather stay at home and be safe and work from home because they can afford to do that. But it can't be a permanent solution. The permanent solution is office, and office flavor of the office is not going to disappear anywhere. It's only a short pause that is there in
Um,
terms of demand pickup, but it'll happen.
Mr. Razak, can I kind of counter that, and not counter that really, but just wondering. Uh, One belief that came in via conversations with a lot of companies was that the movement may be away from the central business district into peripheries, wherein people don't need 1,000-seater office in the center, in the business center of the city. They might take up a 200-seater, for example, and do small clusters in areas which are not necessarily in the central business district, and that might have a bearing on how rentals move. It might pick up in peripheral areas or other areas, and the central business rentals might move down.
See, there are a lot of theories. I mean, people talk about the hub and spoke. They talk about decentralization. But honestly, in any city you take the CBD hardly has any space. It's very little space that is there. But it's the periphery where the large campuses are and where the huge amount of spaces that have been built are getting built. Now, if those spaces, the take up doesn't happen, that's where the stress will come from. And even today, those spaces are going in any city you take it, even if it's a Mumbai, which is a Navi Mumbai or something. If you go to the peripheral, it's all 60 rupees type of rent that you get, between 60 to 70 rupees. You come into the CBD, it goes up. Say in a Bangalore, it's about 100 plus, even going up to 200. In a Mumbai, it goes up to 300 in BKC. And in a Hyderabad, it's still that 60, 70 rupees wherever you go. Chennai is also that 70, 75 rupees rents. And as you go a little in the suburb, in Chennai, maybe it even drops to 35, 40 rupees. So that's how the rentals are panning. And it's question of finally how the businesses want to, sort of run their business. And it's only a matter of time. We can keep on conjuring what to do, but it's only a long-term view that needs to be taken. But I must tell you, there is a lot of demand, and from large MNCs. Even in this period, we have signed some large leases, but those are not an indication. I believe the indication will come when normalcy arrives, and at that time, we'll come to know how the businesses will do. Of course, they will do their corrections. Another thing that will happen now is that space requirement will actually go up; it won't go down because of the distancing. Earlier, they used to pack up a whole lot of people in a smaller space. Like, they used to be per seat, even 50, 60 square feet used to be consumed per seat. And now I think that will go up to maybe even 160 or 200 square feet for a seat. So the number of people that will be packed in per square foot will be much lesser. And that will also increase the requirement for space. So probably there could be even a hybrid of 20-30% working from home, balance working from office. So it's be a combination of both. And since business is going to increase, the demand is not going to slow down. It's only going to increase in the office space segment. Of course, now, just in the short term, there will be some desperation. There will be some sort of, in case there are a lot of space take up is being given up, a lot of vacancy suddenly starts coming up. There will be a lot of churn in the market, and there will be sort of, fear that sets in, and a panic. Now, that panic reaction will happen in any market. It will stabilize, water will find its level. It's a matter of only a few months, and everything else will sort of be back to normal.
Okay, so I take it that for you, office rentals haven't gone down. What about mall rentals?
No.
Because I believe you gave a waiver any which ways. How is the situation now? And would that be similar for all major mall operators, you reckon?
Yeah, it will be similar for all. See, malls are completely different from office
Of
rentals,
course.
because see, office you're just renting out the space, and the rest of it, the company that takes up the space does their business. Now in a mall, basically, we have to ensure footfalls. We have to ensure that the trading happens in the malls. We have to ensure that there is a right type of people that enter the mall. And most of the malls, at least for us, we had a base rate as rental, and the rest was all on revenue share. So we could also, the more the business that the retailer did, we also took the benefit of that by way of the upside on the revenue share. Whether it was cinema, whether it was food, whether it was fashion, or whichever product, we had the upside because of the percentage of revenue share as when the turnover is more. Now, believe you me, once the lockdown happened, when the trading didn't take place, we realized that, listen, the traders can't pay us when the cash registers are not ringing. There's no way that the tenants can pay us the rent. So we were the first movers to say, listen, during lockdown, fine, don't pay us rent. It's 100% waiver. Of course, it's a big loss to the company, but it's a question of relationship and confidence building. Now we did that, and now once the malls have opened, trading has slowly picked up. It started initially when we opened the malls in June. It was some 25-30% trading, and the footfalls also were low. Then, of course, certain components were not open, even still not open, like cinema and entertainment. Now entertainment has been allowed, but cinema is still not allowed. And then even restaurants, till last month, we could not serve liquor in the restaurants, so the footfall in the restaurants was low. So then there was this demand from the retailers, listen, you'll have to support us for some more time. So we had a debate. We told the retailers, listen, we've supported you as zero rent during the lockdown, so now it's up to you to give us the 100% rent as per the contract. Because see, if you go strictly by the contract, there's no question of waiver even during lockdown. Now it's a sort of a conscious call you will have to take, where you will have to balance the needs of the retailers, make sure that they also survive and they are in your mall. So when we did this, the only thing that happened for us positively was we most of our retailers opened, except those that could not, like cinema and entertainment. I think 95% plus of those retailers that could opened their thing and started trading. They started slowly. Today now, as of last week, I think now they are trading at around 60% or 70%. And one category is now actually shot up. It's the electronics is doing 125% of the normal sales that used to happen pre-COVID. So electronics is the winner there. Fashion has taken a sort of a back seat, a beating, because there's no partying, there are no events. So obviously people don't have a need to go and shop for clothes. But that also will come. I mean, it's only a matter of time. So we have to support the retailers. There's a demand from them to see that we give them some more support in terms of either pure revenue share or some break in the minimum rental. These discussions go on. There's no sort of one rule for all. We strictly, if we go by the contracts, we'll have to we'll have to follow it. But then we are looking at each one and seeing their strengths and seeing how best, because there are some few smaller retailers, even if you support them, they cannot survive. So it's a decision that we have to take on a case-to-case basis. But most importantly, the thing is, we have to see the show goes on, that the retailers are happy and the trading happens, and the footfalls come back to the mall. Of course, see, even in the malls today, I can't have events, I can't have crowding, and that's it's going to be a long time since that starts again. So we'll have to wait and watch how things pan out. But happily, the thing is, though a lot of people said, listen, now people are used to online shopping, they'll never enter a mall. That's not it, because malls are just not about shopping. Malls are about networking. It's about a social infrastructure where people get together and they spend time with friends and family. So that's coming back. So, and even shopping is happening. And today what's happening is, whatever footfalls that get into the mall are serious shoppers. So though the footfalls are less, the turnover, as I told you, has gone up to around 50-60% and maybe more as we go along. And let's see that. I think these festival seasons coming around, and I'm sure that we'll hit the normal levels that we used to earlier.
Well, cross fingers for that. Therefore, one last question as we wrap up this conversation, Mr. Razack. I heard you mention that September you will see the numbers do the talking, if you will. unless I'm misquoting you. Would you reckon that? Would you reckon that this would be not in comparison to the June numbers, because they would anyways be bad, but compared to pre-COVID numbers, consolidated, would real estate and rentals make up for the other small issues, and therefore would the numbers look okay?
No, in terms of sales, if you ask me, September numbers will be probably better than the March numbers, because like you said, June numbers won't be as good. So we would have done well because for two reasons. One is the sales have picked up. Secondly, we've got some good locations and good launches. So that's there. That's a given. As far as rentals is concerned, I don't see any dip there. As far as the office rentals, yes, mall rentals is still work in progress. And one segment that has really taken a big hit is hospitality. Now, hospitality, I see it another one more year for it to really get on its feet. Today, we are grappling to see how we can keep on reducing the overheads and then get back the momentum. Yes, now what's happened is slowly the hotels are booking up some events. But these events also have to be the small events, 50 or maximum that's allowed as per law today is 100. So that's that. These are the type of events. When I say events, it's engagement parties, weddings, and things like that. And those are now slowly picking up some. We are picking up the business for that. But travel is not there at all. A very minimal travel. So the room room occupancy is very very low, except in our service residences, which are basically long stay. So all in all, hospitality is the worst hit and will remain the worst hit. And I think it will be about a year plus for it to get back on its feet.
Got it. Mr. Razack, we wish you all the best for that and more. Stay safe, and thanks so much for joining in today.
Niraj. Thanks so much. Lovely chatting with you.
Likewise, sir. Thank you. And viewers, thanks for tuning in to this edition of The Talking Point.